Hi everyone, welcome back to third video of reconciliation chapter of cost and financial accounts. Now here we are going to solve this another question of reconciliation, and this would be our third question because we have already seen two questions in the previous two videos, and along with those two questions we have also seen the technique and concept and everything. In the first video it's entirely Hindi, 70% Hindi is there, and then in the second video it's completely in English. So to understand the technique and as well as the format and everything, if you understand Hindi very well, then please watch the first video. If you don't understand Hindi, then please watch the second video to understand the technique and the format and everything. Okay, see all these things, right? Now in this video, in this third video, I'm not gonna go into the technique and all because I have already explained that. So directly we are going to go into the problem. So see here in this problem, what do we have over here? In this problem, I'm going to specifically focus on the opening stock and the closing stock, undervaluation as well as overvaluation, because you people have kept on messaging me regarding this, how to solve the reconciliation problems when opening stock and closing stock is given. So that's what we're going to focus on. And then there are a few more complicated transactions we're going to see. And here, if you can see, the question is a bit different. Here we have two columns, costing books, financial books. Right, so it's a bit different. In the previous question, what used to be there, the transaction used to specifically tell you in which book it has been recorded more, in which book it has been recorded less. But here it's not like that. Here see, works overhead, two figures are given, 68,500, 72,000. So what is the meaning of this? It means in costing books it has been recorded at this amount, in financial books it has been recorded at this amount. So you have to compare and see in which book it has been recorded more, in which book it has been recorded less, like that. Is that okay? So that's the basic idea about that. Is that okay? Right, now let's start the video and let's solve this problem and understand properly regarding opening stock and closing stock, and let's solve the whole problem. Now let's solve this question. See here, it's very simple. From the following details, you are required to prepare a reconciliation statement and also ascertain profit as per financial books. So we have to prepare the reconciliation statement and also ascertain profit. You have to calculate the profit as per financial books. We can easily do that. We can start with the costing profit, do some adjustment, and we will reach at financial profit. See here, costing profit is given, profit as per cost records, but the financial profit is not given. We have to calculate that. Is that okay? Right, so let's start. First we will take the costing profit. See here, reconciliation statement, particulars and amount, profit as per cost accounts, 3,85,000 as given in the question. And then what do? We start off with the first transaction. See here, the second transaction actually. So second number, works overhead, 68,500 in the costing books, and in financial books it is 72,000. Now tell me, what do we do? This overhead means what? It is an expense. Expense has been recorded more in financial books. I've always told you, we have to see the impact of transaction on the target profit. And whatever impact does the transaction have on the target profit, that is what exactly we have to do. See, it's very simple. Overhead is an expense. It is recorded more in financial books. So what is the impact on financial profit? Expense has been recorded more on financial books, in financial books. So on financial profit, the effect is negative. The profit would be less, isn't it? Expense has been recorded more, profit will be less. So that is what exactly we have to do. We have to less that transaction. See here, works overhead under absorbed in costing books, that is equal to 3,500. How is it 3,500? See here, 68,500, 72,000. You have to take the difference of that. See, 72,000 minus 68,500, that's equal to 3,500. So in financial books it was recorded more by 3,500. So that's why financial profit impact is negative and we have to less the transaction. You all know this, isn't it? Yes. So next transaction we have over here is admin overhead. Overhead means expense. So admin overhead, 92,715 costing books, and in financial book it is 1,02,650. So again the same thing, it has been recorded more in financial books. Expense has been recorded more in financial books. So the impact on financial profit is negative. It has been recorded more. What is recorded more? Expense has been recorded more in financial books. So the effect on financial profit, the impact on financial profit is negative. So if it is negative, we have to less that transaction. Whatever effect the transaction has on your target profit, that is what exactly you have to do. So admin overhead under absorbed in costing books, the difference you have to take 9,900. If you subtract these two, 1,02,650 minus 92,750, it's equal to 9,900. Is that okay? So that's what you have to do. Now you would be wondering, why am I writing this under absorbed in costing books and all, and how am I writing this? See, it's very simple. See, in financial books, you record everything on historical basis. Yeah, whatever that has actually happened, that's what you record in the financial books. But in the costing books, what you do is you do estimation, yeah, absorption and all that. So that's why works overhead and all these are estimated beforehand itself. Yeah, they are absorbed. So what you have to do, you have to write that down. See here, 92,750 in costing books, admin overhead was recorded at 92,750. Yeah, so that means it was under absorbed. It was under absorbed. So that's what I have written. It's just English. It's simple. Yeah, see here, works overhead 68,500. It has been recorded less. So that's why I have written under absorbed in costing books. CB means costing books. Yeah, that's just English. You can just write the works overhead also. You will not lose any marks. Admin overhead, that's also enough. Okay, fine. Next, what do we have? Next transaction we have is selling overhead. Selling overhead, selling and distribution overhead. It's what? It is your expense. So this expense has been what? Recorded more in costing books. See here, 45,600 in costing books and 38,500 in financial books. So now what you have to do? You have to see the impact of this transaction on your target profit. Always do that. Yeah. So 38,500, it has been recorded less in financial books. So expense has been recorded less in financial books. That means on your financial profit, the impact is positive. Expense has been recorded less, profit will be more. Expense has been recorded less, profit will be more. So you have to add this transaction. See here, selling overhead over absorbed in costing books 7,100. How did I get that 7,100? The same way, I have taken the difference. Yeah, 45,600 minus 38,500, that's equal to 7,100. Let me just show you in calculator. 45,600 minus 38,500, that is equal to 7,100. Yes. Yeah. Now how did I write that over absorbed in costing books? Simple. See here, it has been recorded more in costing books. Yeah, so you can call that as over absorbed in costing books. Yeah, that's the English you have to write. Okay, don't worry about that. Simple. Yes. Next transaction you have is depreciation. Now what is depreciation? Depreciation is an expense. Depreciation is an expense and it has been only recorded in the financial books 62,850. So now what will happen? Expense has been recorded in financial books. Expense has been recorded in financial books. So the effect on financial profit is what? It is negative. Expense has been recorded, your profit will be less. Expense has been recorded, your profit will be less. So that's why you have to less this transaction, depreciation 62,850, the entire amount. Why entire amount? Because it has not at all been recorded in costing books, isn't it? So that's why you have to write depreciation 62,850. If you want, you can also write like depreciation recorded only in financial books, only in FB. That way also you can write. Okay, but it will be less over here, the entire amount 62,850. Is that okay? Right. Moving on, then we have stores adjustment credit in P&L. Now credit means what? It is income. It is income. Yeah, because on the credit side of P&L, what do you have? You have all the income. So that's why it's income, stores adjustment. Now let's see what is happening. This income has been recorded only in the financial books, isn't it? See here, 7,500. It has not been recorded in the costing books. So income only recorded in financial books. What is the impact on our target profit? On our target profit, the profit which we want to reach, financial profit, the effect is what? The effect is positive. It is income recorded only in financial books. So the effect is positive. Income has been recorded, profit will be more. Income has been recorded, profit will be more. So the effect is positive. So you have to add this transaction. Stores adjustment credit in P&L, that's 7,500, the entire amount, because it has not been recorded at all in costing books. Is that okay? Right. Next we have the interesting thing, value of opening stock and the value of closing stock. Yeah, so let's understand regarding this. See here, opening stock and closing stock, where do we take that in the final accounts? Do you remember in 11th you have seen that, isn't it? In trading account you used to take the opening stock on the debit side and closing stock on the credit side, isn't it? Yes, in trading account you all know we take all the expenses on the debit side and all the incomes on credit side. Yes, but most of the people directly think that opening stock is also an expense and closing stock is also an income, but it's not true. It's not true. It is not an expense or income. Yeah, we take the opening stock on the debit side of trading account and closing stock on the credit side of trading account just because we can accurately calculate the gross profit, not because it's an expense and this is income. Yeah, but it is helpful for us to take it like that so that we can calculate the gross profit. Yeah, but here in reconciliation of cost and financial accounts, what you have to do is you have to think in your mind that opening stock is an expense and closing stock is an income. If you think like that just for the calculation purpose, then it's very easy and logical to prepare the reconciliation statement. All right, so that's what you have to keep in mind. Is that okay? Right, so see here we have value of opening stock over here, 86,400 in costing books and 75,000 in financial books. So just by looking at these two figures you can understand that opening stock has been overvalued in costing books, 86,400 in costing books, and in financial books it is 75,000. Now what we have to do while writing over here the statement, we are going to write that opening stock has been overvalued in costing books. But for the calculation what we have to do, see, opening stock is an expense. Opening stock is an expense. Yeah, just think like that. Opening stock is an expense and it has been recorded less in financial books because we need to know the impact on our financial profit, on our target profit, the profit which we want to reach at, isn't it? So it has been recorded less in financial books. What? The opening stock. Opening stock is an expense. Expense has been recorded less in financial books. So if expense is recorded less in financial books, the effect on financial profit is positive, isn't it? Expense, opening stock is recorded less in financial books, so the effect on financial profit is positive. So you have to add this transaction, opening stock overvalued in costing books. This is just the English. Okay, just by looking at it you can understand opening stock has been recorded more in costing books. Fine, that's the English we have to write, opening stock overvalued in costing books. But for the calculation what you have to do, you have to see the impact on financial profit. The impact on financial profit, to see that, see here, 75,000 recorded less in financial books, expense recorded less in financial books, so the effect of that is positive. Yeah, expense recorded less, profit is more, so we have to add that transaction, opening stock overvalued in costing books, 11,400. Why 11,400? The difference you have to take, 86,400 minus 75,000. See here, 86,400 minus 75,000, that's equal to 11,400. That's your difference between the financial books and the costing books. That's what you have to take, 11,400. Is that okay? Right. Then moving on, next we have value of closing stock. Now what did I say? Closing stock, treat it as income. Think like it is an income. Once you know that opening stock, we can think like it is expense and closing stock income, then done. Yeah, it's same like all the other transaction, isn't it? You can easily do it, right? See here, 94,800 in costing books and in financial books it is 86,400. So just by looking at these two figures you can understand that closing stock has been overvalued in the costing books, isn't it? 94,800 in costing books and 86,400 in the financial books. It has been overvalued in the costing books. Fine. So you all know that closing stock is an income. We can treat it like income for the calculation purpose. So what you have to do, first you have to write the English. Think of that English. Closing stock has been overvalued in costing books. Fine. But for the calculation purpose, you have to see the impact of this item on your financial profit. So see here, it has been recorded 86,400 in financial books. It has been recorded less. This closing stock, this income has been recorded less in financial books. How much? 86,400. So see here, income has been recorded less in financial books. If income is recorded less in financial books, then profit will also be less. Income recorded less, then profit will also be less. So the impact on financial profit is negative. isn't it? So that's why you have to less this transaction. See here, where is it? Closing stock overvalued in costing books. That's the English you have to write. Closing stock overvalued in the costing books. But then for the calculation purpose, as I told you, income has been recorded less in financial books, so profit will also be less. So that's why you have to less this transaction. Where is it? 8,400. The difference of there. Yeah, the difference of 94,800 and 86,400. Is that okay? So that's what you have to do. Income has been recorded less in our target books, in our financial profit. That's why we have to see the impact. Income has been recorded less, profit is also less, financial profit, yeah, negative effect. So you have to less that transaction. Is that okay? Right. Moving on, then we have reserve for bad debts. See here. Now reserve for bad debts, is it an expense or income? Tell me. It's neither of those two. It's neither an expense nor income. Why? Because see, reserve for bad debt is what? It comes under reserves and surplus, isn't it? It is reserve. Same with tax provision also. Provision is not a reserve actually, it's liability. Yeah, but this is reserve. Yeah, this is not your expense nor income. Same with the tax provision. Tax provision is also neither expense nor income. Yeah, so what you have to do, think properly. How do you create reserve for bad debts? You create reserve for bad debts out of the profits you have. You create the provision out of the profits, out of the profit and loss. So that's why when you create these two things, tax provision and reserves, what happens is your profits decreases. So you can think like these are expenses, but these are not expenses. But you have to think like these are expenses because they reduce your profit. Yeah. How? When you spend the money, your money reduces. Similarly, here what you're doing is you have the profit. Let's say profit is 100. You have to create a reserve of rupees 10. So what you do is you take that rupees 10 out of this 100. So this will get reduced rupees 90. Isn't it? So the same way, reserves and provisions decrease your profit because they are created out of profits. So that's why you have to think like these are expenses and solve the problem. Is that okay? Right. So reserve for bad debts, it's an expense. Just think like that. So it has been only recorded in financial books. It has been only recorded in financial books. Now what you have to do, see here, expense only recorded in financial books. So the impact on financial profit is negative. Expense has been recorded, profit will be less. Expense has been recorded in financial books only, the financial profit will be less. Yeah, negative effect. So you have to less that transaction. Reserve for bad debts, 16,050 rupees. Is that okay? The entire thing, because it has been recorded in the financial books. Then you have interest on bank deposit received. Interest on bank deposit received. Now this is your income. The interest which you have received, it's your income. So this income has been only recorded in the financial books, and that's what happens. You know, these are what? Purely financial items. Yeah, reserve for bad debts and this interest on bank deposit, tax provision, interest paid, and all these things. Yeah, they will never be recorded in the costing books, only in the financial books. Is that okay? Right. So this income has been recorded only in where? Only in the financial books. So see here, income is recorded only in the financial books. So your financial profit, the effect on financial profit will be what? The financial profit will also be more. Income more, financial profit more. Yeah, positive relation. So that's why what will happen? A positive effect will be there on your financial profit. So that's why you have to add this transaction. See here, interest on bank deposit received, 16,750. Is that okay? Right. Then what do you have? Then you have loss on sale of machinery. Now loss on sale of machinery, is it an expense or income? It is expense, isn't it? Loss means what? It's invisible expense. So that's why you have to think it's an expense, because it is an expense, right? It has only been recorded in the financial books, 15,000. Now what you have to do, see, expense has been recorded only in the financial books. Yeah, so the profit will be less. Expense has been recorded, profit will be less, financial profit. Yeah, so the effect on financial profit is negative. Yeah, expense has been recorded, financial profit will be less, so you have to less this transaction. See here, loss on sale of machinery, 15,000, the entire amount. Is that okay? Right. Next you have tax provision over here. Now the same thing, tax provision is neither expense nor income. So what you have to do, you have to think like it is an expense. Why? Because it decreases your profit. Provisions are created out of the profits, the free reserve which you have. Yeah, so it's a liability actually, but you have to think like it's an expense just for the calculation purpose. So think it is an expense. Expense only recorded in the financial books. Yeah, so what will happen? expense only recorded in the financial books, financial profit will decrease. Yeah, the impact is negative on financial profit. That's why what you have to do, less. Yeah, in financial profit is decreasing. Yeah, the impact is negative, so that's why you have to less this transaction. Tax provision 42,750. Is that okay? Right. Next you have interest on bank loan paid. Interest paid, purely financial item. So this is your expense. You're paying the interest and it has been only recorded in financial books, and that's what happens. So expense has been recorded in financial books, so profit will be less. Yeah, expense has been recorded, profit will be less, so the impact is negative, so you have to less this transaction. Is that okay? Right. So that's why you have to less this transaction. Interest on bank loan paid 18,250. Is that clear? Right. So this is what you have to do. Simple. Yep. So let's do the calculations. See here, 3,85,000. Can you see that properly? Let me take that over here. 3,85,000 plus 7,100 plus 7,500 plus 11,400 plus 16,750. That's equal to 4,27,750. Minus all these things. See here. Minus first we have 3,500 minus 9,900 minus 62,850 minus 8,400 minus 16,050 minus 15,000 minus 42,750 minus 18,250. That's equal to 2,51,050. So here we have the financial profit, the profit as per financial accounts. Is that okay? So in this question we understood that we can think opening stock as an expense, closing stock as an income. We can treat it like that just for the calculation purpose and solve the problem easily. And one more thing, we saw that reserve for bad debts, it's neither expense nor income. Same with the tax provision. Provision is a liability. Yeah, so what you have to do, you have to think these two items, reserve for bad debts and tax provision, as expense, because they decrease your profit. When they are created out of profits, so your profit decreases. That's why you have to think they are what? They are expense, because they have negative relationship with the profit. Is that okay? Fine. So these are the 4 different things we understood over here, and then rest all was same only, isn't it? And then this way of question. Yeah, 2 columnar question. We have costing books and financial books. We have to compare and see the difference of each items. Is that okay? Right. So that's it for this video. Okay, I hope you understood this.